Hello, hello, hello. Welcome to Al Stock Trades. How's everyone doing today? What's going on? Hello, Clover Health family. Well, in this video, we're going to go ahead and reintegrate this title, Why Small Caps Are Set to Explode, right? So I went ahead and actually published this video 2 weeks ago. Only 641 people actually viewed it. This is a great indicator for me because it tells me how hot the market is, especially when it comes to high beta stock like Clover Health. Literally same title, small caps set to explode, navigating the potential recession ahead. I recommend watching the video if you haven't done so. But what happened today, right? What's going on today, guys? Like, let's go ahead and let's investigate what's going on. So, like, let's type in Clover here for a sec. You know, Clover's up, what, 12.3%? What's going on, right? So I'll tell you what's going on. The CPI data came in, and just a very good summary here. We got a 4.0% core and a 3.2% overall. Did you see the Russell trading like a penny stock? My goodness. Well, of course I saw the Russell. In fact, I have the Russell up right here. Look at that jump. Oh my God. Who would have predicted? Who would have predicted that the Russell's up 5.44%? I mean, come on, man. Al Stock Trades is full of crap, right? He doesn't know what he's talking about, right? He hasn't been in the market for decades, right? He doesn't know, right? I mean, think about it. He doesn't have 3 degrees, actually 4, going to be 5 with his MD. He's not going to become a brain surgeon, right? All right. So on this video, I'm going to show you the data. And I hope that you're starting to see patterns of what I've been saying, and hopefully my words go into your hippocampus and integrate into your memory. So as you can see here, inflation's cooling down. In my previous video, if you haven't watched it, we talked about how Chamath was referencing the M2 money supply and other metrics, which we've basically been talking about since 2-3 years ago when we put in the mastering course. We're starting to see inflation is heading into the rear view mirror. Now, there's been a lot of folks online, people that have way more subscribers than me. You know, one of them, Clear Value Tax, saying a recession, a huge one is coming. You know, again, nobody knows, right? Nobody knows. You got to just look at the data, right? And the best thing to do is do an intrinsic value calculation, find stocks that are undervalued, make sure they have a competitive advantage, make sure they have a moat, and then dollar cost average. I mean, it's just simple as that. But again, people want to complicate it and want to add their own little spice. But overall, inflation's heading down. This is good news. I'm very excited. In this video, we're going to reiterate, and we're going to look at why I predicted that small caps are set to explode. And this gentleman over here went ahead and said, dude, Russell 2000 is trading like a penny stock. 2 weeks ago, we warned you. 2 weeks ago was essentially, we'll call it right here. What is it? 2 weeks, 2 weeks, what is 2 weeks? November 1st. Right here. November 1st, I published this video. I said, hey, small caps are going to explode. Boom. Boom. So let's go ahead and talk about why. So first things first, I've given a lot of my analysis on the Clover page. I've created a little news station. I'm going to just warn you guys, though. Once I'm starting residency, these videos are going to be very rare. I'm rarely going to come on, right? I'm going to, my promise was to talk about Clover and be able to really because I really got pissed off by how manipulated the stock was and how Wall Street kept on decreasing the price targets and really, screwing over retail investors because while other stocks like SoFi, are trading at an intrinsic value that is a lot higher because of the company that that's it's being backed by. They were surprised that Chamath was able to secure SoFi with one of their SPACs because SoFi, the CEO, is well respected. But again, we're going to go ahead and cover Clover and be able to, hit it with the home run and show you guys what intrinsic value calculation is. A lot of folks didn't even know what an intrinsic value was, didn't know how that, you can set a price target for a stock. They know these things. So we're going to go ahead and hit it off. But and be able to show you this. But once residency starts, I'm not really going to be on YouTube a lot. It's going to be very rare. But our platform, which is why I created it, is going to have everything, right? So if you haven't taken advantage of the Black Friday coupon code, please take. I'm telling you, take advantage, because you're not going to see prices this cheap. Okay, $1,000 off. So I give my analysis to folks, and a lot of retail community said, I hope your analysis is right, man. I don't know, man. I don't know if it's going to play out like this, man. The market's really screwed up right now, and I don't know. So here's the thing, ladies and gentlemen. All the times that you see an opportunity to buy in the S&P 500 and essentially, the stock market, all the times there was a great buying opportunity, retail investors always had high amount of puts. This is robo. The R stands for retail. Every time there was an opportunity to become a millionaire, every time there was an opportunity to make money, retail investors were fear. They were buying a bunch of puts, right? It shows you how back-assed and their thinking is. It shows you how the media has gone into their brain and infiltrated their brain into thinking logically to a point where every time they make a decision, it's literally the opposite. Okay, so big deal, right? So when the people is equal to being fearful, it's an oversold RSI in the technical analysis spectrum merged with the fundamentals of below the intrinsic value, gives you a conclusion that you need to be greedy when others are fearful. So key points, we already talked about them. I'm just going to go over commercial and industry loans that have fallen a little bit. Every time they go from greater than 10% fall to zero to less than 0% fall in terms of being negative, the economy is stressed. But here's the catch. Here's the kicker. If you actually do the analysis when this happens, you can see that within 3 months to 3 years, the stock market actually rallies. This negative movement is actually preceded with a positive movement in the stock market from data from all the way from 1975, 1990, 2001, 09, 21, and now 2023. Okay, and we got this data point. Okay, and if we were to look at the financial returns, you can see that within 2 to 3 years later, we are sitting positive, and even as early as 3 months. And what did I tell you about? And I circled it in green. Okay, I circled it in green. I said, hey, look at the Russell 2000. Look how much it's going to go up 6 months from 2 weeks ago. All right, 3 months in, we're already satisfied. Literally, this gain of 5%. Again, guys, you can't like lie about the research. You can't fudge that up. You look at all these bigger YouTubers on this platform, which is why we created the Al Stock Trades. These people don't know what they're talking about. They're just basically talking points of CNBC. They read CNBC and they just basically regurgitate it into their followers. No one's actually doing real analysis, real research. No one is actually taking a look at other economists and formulating their opinions and using data. That's just how it works, right? So again, we don't have the flying colors and buzziness of a channel. Again, my priority is becoming a brain surgeon, not a YouTuber, right? I'm, smash the like button. That's not my life, okay? So what I'm trying to show you, I'm trying to help you guys see how research is done, okay? Okay, so so Russell 2000 is going to basically be a great maneuver to go, especially as the CPI data keeps decreasing. Feds are going to have to cut interest rates, especially when you get to the election cycle. You know what I mean? Especially, definitely there's going to be some pressures, even though they say there isn't any. So it's looking pretty damn good for Russell. I mean, I told you a percent positive rate of 100% that we're going to be in the green. I mean, come on, guys, right? Unless there's a big war that we can't even predict, right? So again, like I said, if you look at this factor cycle, we can see 89% returns in small caps in 3 years. Now, again, poor retail investor came to me like, Al, 89% is nothing. It is nothing for Clover. 89% is nothing. I don't know why I did an Indian accent, right? Why? 89% is nothing. I'm like, my friend, this is for the S&P effing 100. This is for the whole stock market, Habibi. This is not for the small caps, okay? This is not for the small caps, okay? All right. So, like I told you guys, this data is data-driven. We've been featured on Bloomberg, Yahoo Finance, the freaking NASDAQ. Go to alstocktrades.com, see the data. If you like it, we have a Black Friday coupon code. Type in Black Friday, you get $1,000 off. All right? And then there it is, guys. By the way, this Black Friday coupon code, it will be expiring soon, so take advantage. But yeah, let me just go ahead, one more comment, and then I'm out. I bought EBS. We talked about it a few videos ago. At the bottom, shot up 23. I got cross-eyed and took profits at 3/4. Hey man, sounds good. Sounds good. See the screen. Did Clover seems negatively effort to give the EPS? Did the entire 100 get deducted from the gross profits? Yeah, so we'll talk about that when the time comes. But this is from the analysis of my group members. This is usually there's a certain percentage for between 80 to 85% MCR that an insurance company can make, capping it anywhere between the 15 to 20%, almost like a gross margin. Anything above that needs to be returned back to the federal government, right? Which is why it's imperative for Clover to find other alternatives to utilize their data for side revenue. And hopefully, once this data becomes more, their AI becomes more adamant that it actually does what it does, and not try to screw over patients like what we've seen with United Healthcare subsidiary AI, then maybe the market may start reallocating some attention to Clover. But in the meantime, what I'm looking at, all this is distraction. What I'm looking at is free cash flow in 2024, net EBITDA positive in 2024, and the net income positive in 2025 or 2026. Okay, that's what I'm looking for. Those are my insights, right? Again, I'm not a financial advisor. You do what you need to do, but those are my insights, okay? All right, ladies and gentlemen, I hope this video was helpful. Again, it's just a reiteration of what I was saying. I mean, it's very clear that, frickin' A, guys. The Dow up 489 points, S&P up 8,400 points with target projections anywhere estimating to 4,600 in terms of the S&P 500. Russell finally awakening. This is pretty good, guys. This is pretty good. We're doing pretty damn good. And look at this, 1 day increase in 12%, right? Just wait till this thing becomes free cash flow positive and net income positive. See what happens for you. All right, I'll see you on the next one, ladies and gentlemen. If you like the video, please smash the like button, do all that YouTube bullshit. And I appreciate you guys. Hey, man, I appreciate your time in watching these videos. And again, Black Friday sale is almost over. We have deals with a firm. You have lifetime access to Wall Street data. I've made this accessible for all of you guys. This lifetime access, the money that you pay now is essentially going to be covering the data. I don't pocket anything. That's pretty much what this is. All right. So, and again, to answer the question that Mr. Seedless here, an MCR lower than 80% can be reimbursed and returned to patients. Otherwise, yes, difference must be returned to CMS. Boom. All right, ladies and gentlemen, always a privilege and honor. I will see you on the next one, and let's make that freaking money. Peace out.